My name is Michael Lewitt. I write the Credit Strategist newsletter, which is a monthly publication that discusses the credit markets, macroeconomics, anything that really is important to investors actively investing in the markets. The newsletter began publication in 2001. It was an outgrowth of a monthly letter that we used to write to investors in our hedge funds at my old firm. My background, I started actually as an attorney. I'm a recovering attorney. I then spent some time at Drexel Burnham, where I learned about the credit markets working for Mike Milken. I then worked briefly at a large bank, Security Pacific in California, and then I started a money management firm in Florida called Harsh Capital Management in 1991. At Harsh Capital, we managed a very large private equity portfolio called the Drexel Burnham Employee Partnerships in the 90s. I then also managed all kinds of credit portfolios, high yield, bonds, loans. I also managed a short credit portfolio for several years. In 2011, I left Harsh Capital, took some time off. In 2012, I started managing the Third Friday Total Return Fund, which is a market-neutral options fund that has performed very well since inception in 2007. The Credit Strategist is really designed to appeal to a broad range of readers. I have a lot of people who read it from the hedge fund community, from the wider investment community. I have a lot of academics who read it, government people who read it, a lot of people in the institutional world. And what I try to do every month is try to figure out exactly what's most important in the markets that is not being spoken about by Wall Street and by the mainstream financial media. I'm trying to provide people with the information that Wall Street doesn't want to tell them and give them an edge that they're not going to hear from the politically correct or mainstream media. I look for information in unusual places. My newsletter every month starts off with a quote. It's usually not a quote from Wall Street or from the media. It's usually a quote from philosophy or some kind of other publication. And what I'm trying to do is make the point that everything is connected, but everybody has to learn to think for themselves. There's a narrative that the mainstream media and Wall Street wants to promote that is usually very dangerous for investors to believe. So I try to question very carefully what the consensus is and try to help investors figure out how to make money by going against the consensus. Sometimes that's very difficult. Since the financial crisis, it's been especially difficult, for example, to try to be a short seller when the central banks are pumping up markets. But at the end of the day, one of the things I've learned over the years is that generally the great investors make most of their money over very short periods of time, and the rest of the time they're basically treading water. So if you're making most of your money 20% of your time, and the other 80% of the time is the danger zone where you can end up losing it, you have to be very, very careful. I write, every month I write on credit, of course, it's called the Credit Strategist, but I also write on the macroeconomic situation. I pay a lot of attention to the Federal Reserve, which I think is doing great harm to the economy. I write about politics, not really in a partisan manner, although I don't really hold back, but I try to make it clear where policy or policy failure is having a significant impact on what's happening in the markets. I also pay a lot of attention to what's happening in Europe, in Asia. I pay a lot of attention to geopolitics, which I think is a very underplayed part of the markets. And I try to look back and look at history, because I think history is a very good guide to what could happen in the future. So I try to look back and look, for example, what's happening today and compare it to what's happening or what happened in the period just prior to the financial crisis of 2008.